You're tuned in to Agriculture Today, and we start our Wednesday show talking about the One Big Beautiful Bill with K-State and Washburn law professor Roger McEowen. Roger, thanks for joining us today.
Well, good to be with you again, Shelby.
Roger, we've previously talked about this reconciliation bill, the One Big Beautiful Bill, but can you remind us, what is it?
Well, it's 940 pages as it's coming out of the Senate, and 384 of those pages deal with tax issues. So this is primarily a tax bill. Almost 40% of it, actually over 40% of it, are tax provisions. And the cornerstone of that, and the foundational aspect of that, is it continues existing tax law. So where we're at right now, under the Tax Cuts and Jobs Act, a lot of those provisions are set to expire at the end of 2025 unless Congress can continue those provisions. And that's what this bill does, plus add some of the president's priorities that were mentioned on the campaign trail, such as no tax on tips and no tax on overtime and being able to deduct interest payments on U.S.-made automobiles and some other things. So this is very major tax legislation. If this doesn't get through, then everybody up and down the income tax bracket range, everybody's going to get a tax increase.
You mentioned that there's 940 pages and 384 of those are related to taxes. Is this a common size for a bill?
It's a pretty common size for reconciliation bills. I've seen them be bigger than this, but 384 pages of tax. It's Title VII of this bill, and that's actually in the realm of stuff that I work with. That's pretty manageable for us. So it's not unusual to see this in big reconciliation bills. And the politics of things in D.C., that's just the way they have to cobble things together because they don't have enough of a majority to get past the filibuster rule in the Senate. So they have to do what's known as reconciliation to be able to pass something on just a 51-vote margin. So you only got a 3-vote margin in the Senate. For the Republicans, it's 53-47. So they could lose up to 3 senators. We know there won't be any Democrats that vote for this. And so there won't be anybody that crosses the aisle. If the Republicans lose 3, then that's the max, because then you'd have to have the vice president come in and break the tie. So that's how thin things are, but that's how this process plays out in the Senate.
And what portions of that Tax Cuts and Jobs Act are we really looking at when we look at this One Big Beautiful Bill?
Well, I think for our farmers and ranchers out there, the business-related provisions are absolutely critical. Bonus depreciation would be restored to 100% first-year bonus depreciation for assets purchased and placed in service on or after January 19 of this year. Currently, bonus depreciation is 40%. It would be 20% next year if nothing changes, and then it goes to 0. And then also expense method depreciation. That would be doubled under this legislation, and those are big in terms of spurring investments. That's going to be big for agribusiness and selling machinery and equipment. That's just huge all the way up and down the scale. And there are other provisions in there that are also important. We've got some interest deductibility issues. We've got some casualty loss provisions that are in there, a whole host of provisions that are important for farmers and ranchers. But one that's very broad and not just tailored to farmers and ranchers is what would happen to income tax rates, the bracket amounts. Those rates would go up for every taxpayer category except the 10% category if Congress does nothing. So that's huge. When you put all this together, plus one I don't want to forget to mention on the business side of things is the qualified business income deduction, the 199A deduction. That would go away at the end of this year. That's 20% deduction on your business income. So if I'm a farmer and I have $200,000 of business income, that's a $40,000 deduction I get this year, which would be 0 next year. So my effective tax rate would be much higher next year if Congress doesn't get this through.
You've mentioned that this will really impact everyone when it comes to taxes. And do you have a few scenarios for us to maybe be able to understand more about the impact?
Yeah, the impact, if we're just kind of trying to reverse things, the primary beneficiaries of the Tax Cuts and Jobs Act were the lower to middle income taxpayers. And so if nothing happens, they get the biggest hit because they got the biggest benefit when TCJA was enacted. And in my most recent blog article on this, I've worked the returns for 3 different types of taxpayers. One was a single mom with 3 children under age 17, so she's going to claim child tax credits for those, and that's something that would get cut in half if Congress doesn't pass this bill. So she's got 3 kids that would qualify for the child tax credit, and I put her at $50,000 in taxable income for this year and next year with head of household filing status, which would be the best filing status for her. And under current law this year, her tax liability is 0. If Congress doesn't pass this law, next year her tax liability is 0, but she loses $2,440 in refundable child tax credit. So that's $203 a month that she doesn't have next year that she would have if Congress passes this bill. I also did a return. I mocked up a return for a family of 4, including 2 children under age 17 that would qualify for child tax credits. I gave them taxable income of $85,000 for 2025 and 2026. So pretty typical Kansas family here. Mom, dad, couple of kids, couple of young kids, taxable income $85,000. This year, married filing joint, their tax liability federal is $2,232. If Congress does nothing next year, that goes to $5,292.50. That's an additional $3,060 of tax, or $255 a month that they'd have to come up with. And so that percentage increase in their tax liability is 137%. That is huge. Then I ran up the income scale for a third scenario. I worked a tax return, just mocked up a tax return for a married couple at $350,000 of adjusted gross income for this year and next year, no qualified children. So this would be the couple that's in their 50s. Let's say they both have well-established careers. The kids are out of the home, can't claim child tax credits, so they don't have any qualified children. They have $40,000 in itemized deductions, so they like 4-H, they like K-State, so they get the charitable deductions, and that includes state and local taxes of $12,000. Now, I came up with their tax liability this year of $61,012. Next year, if Congress does nothing, that would go to $75,121. So that's an extra almost $1,200 a month in tax. Their percentage increase in tax liability is 23.1%. So, yeah, they pay more in dollars. Their percentage increase is less than the family that's making less, who's really going to have to struggle to come up with an extra $255 a month just to meet their federal tax obligation. So it's really important that to a lot of people that Congress gets their work done this week.
As we're recording this then on June 30th, this Monday, where are we at?
Well, as you and I are talking right now, the bill has been read in the Senate. They are ready to start voting. That's going to start this afternoon, this Monday afternoon, and I would expect that's probably going to go a good 10, 12, maybe 14 hours. They could be in the wee hours of the morning before they're ready to vote, either late tonight on Monday night or on Tuesday morning. So as people are listening to this on Wednesday, the vote may have already occurred or is ready to occur, and then the bill gets kicked back to the House. And because the Senate bill is different than the House has a decision as to what to do with it. They either wait this thing out, they go to conference committee, they go through the standard waiting period, or they waive that and they say, we're good with what the Senate does. And as I'm looking at this, I'd say about 85, almost 90% of the Senate bill is like the House bill. And so the representatives are going to have to make a decision. Do we accept that and move forward and pass it? Or do we debate this and go to conference committee and work out the changes and then back to the Senate and back and forth? But the president would like this done this week. And this is one thing you see in a leader that's run a business. He knows he has to set a deadline. And you and I know this. If we're operating under a deadline, then we get stuff done. If the executive here doesn't set a deadline, then the tendency is for the underlings, the Congress in this instance, to take their time and get this done. So you got the pressure by the executive to get something to him. Now, he said just over the weekend, he said, it's okay if they don't make July 4, but we need to get this done. So there still is that pressure to get this done, and definitely get it done in July before they go on an extended summer recess, because if they don't get it done in July, then we are late in the game at that point in time. So let's get this thing done one way or the other so we know what the rules are going to be.
Roger, why is this bill potentially being done in July way different than when it's normally done?
Well, I'm really glad Shelby, that we're having this conversation here on June 30th as you and I are discussing this. What's been the history in the past is Congress has waited until the fall to even start doing reconciliation. Then we don't even get a bill until shortly before Christmas. And that is just nerve-wracking. It's terrible for practitioners trying to advise clients. It's bad for somebody like me that's trying to advise practitioners as to how to advise clients. And it's horrible for the IRS that has to then redo forms. You can end up with a late filing season, and it just becomes an absolute headache for everyone. So actually, I'm real glad we're having this conversation now. And we might see, some of the farm-related provisions are also in here. That's unusual. We usually do a separate farm bill, but they are trying to do some of that in this bill too. So we may get a couple of things here in the next few days, or we may not. We'll have to see.
Roger, I appreciate you taking the time to join us today.
Thanks again, Shelby. Much appreciated.
That was K-State and Washburn law professor Roger McEowen.